Hey guys, welcome back to the channel. I hope everyone is okay. So today I thought it might be a good idea to maybe go over some of the more popular YieldMax and Defiance ETFs to see how the tourist erosion might affect these funds, if any. So let's get into it. So so why does a high yield space attract so many tourists? Well, it's just human nature. People like safety on numbers, and people are just trying to find like the best bang for the buck, so to speak. But sometimes like people make mistakes, and things happen, or maybe they're not paying attention. But anyway, I still have my high yield exposure for now. I want to see how bad things get, especially with like a bumpy September. Although like sometimes like the price action so far has been pretty positive. Like all of a sudden like it looks like it's gonna be a down day, and then like the market like shoots back up. Of course, like the reverse can happen too, but generally September is it's kind of a rocky month for some folks. So as the old guard ETFs get overcrowded, high yield tourists find new ETFs to ruin. So of course you have to always be vigilant. Don't bury your head in the sand. So let's see different types of tourist erosion. So let's take a look at TSLY. So I did this as after like the February 28th, the post split, just to make the numbers a little bit easier. And the figures are as of September 9th. So the assets went from 817 million. Unfortunately, there's a decrease to 667.9 million, which is still pretty decent size, I would say. So assets unfortunately are down 81%, and then like again post split, the share count went from almost 75 million down to 52. So share count went down at a faster rate of 117%. So unfortunately, this is why you see like the Tesla share price still hasn't like kind of like caught up to like how just like the regular Tesla shares are, because sometimes like it goes on a like the Tesla shares itself goes on a tear, especially as we approach like their supposedly new robotaxi date of October 10th. So just be careful, guys. And then pleasant surprise, Nvidia. I would have thought like this one would have been like super over touristed. So it went from as of January 5th to September 9th. The shares, the assets went from 144 million up to 901 million, almost a billion. So assets went up 624%, and then share count went from 66.6 up to 41.1. So the share count actually went up at a slightly, well, almost like the same rate, so 621%. So this is actually a pretty pleasant surprise, especially since this is such a large fund. So good job to the folks that are managing this particular ETF. And then, unfortunately for Coney, hasn't seen like the same type of price action. So I did this as of January 28th. That's like the data that I just happen to have. So 252.7 million up to 515 million. So assets shot up at 204%. So that's pretty good. And then like the share count went from 10.8 to 42.3. So the share count went up 391%. And then also, this just happened to be that the crypto market in general, some of it's still kind of blah, but don't give up just yet. Crypto sometimes it just like rallies when you least expect it. And then, on a similar note, MSTY. So like the fund started February 21st, so it went from 2.6 million up to 461 million, so almost half a billion. So again, assets are 182, went up 182%, and then the share count went from 125 thousand to 21.9 million. So share count went up 203%. So there's some tourist erosion, but it's not too bad. And again, Bitcoin, since this is basically like a Bitcoin fund itself, and then plus like a little kicker of like a software company. Don't give up hope just yet if you're in this fund. Bitcoin just shoot out of nowhere. So, and then moving on to YMAX. So these are like the starting from here. I'm going to be starting to go over kind of like the fund of funds, or like a more diversified ETF. So this one started January 16th. So 0.9 million, so 900K basically, up to 247.7 million. So assets went up a very respectable, almost like 25,000%. And the share count went from 50,000 up to like 14.4 million. So the share count unfortunately increased at a much faster rate, so 28,850%. So it's a little rocky. But hopefully there's like a relief rally, or maybe like a Santa Claus rally in December, and hopefully that'll kind of like catch things up. But hoping for the best here. And let's take a look at YMAG. So its counterpart started the YMAG, Magnificent Seven type of stocks, started a little bit later, so January 29th. So it went from 0.9 million up to 342 million. So assets went up 11,000, almost, about 11,449%. The share count went from 113.6 million. Actually, no, that should actually be a K. It can't go from, obviously it's not 113 million to 6.1 million. Sort of a typo. So it's like 113,000 shares to 6.1 million. The share count went up 12,250%. So again, at a faster rate. But this one's not as bad. And again, hopefully the I guess like once maybe like the election is over, maybe tech stocks can rebound as well, and then that'll hopefully catch things up, so that they're growing at like around the same rate, access and share count. So let's take a look at LT. Unfortunately for this one, it's going through a very, very rough patch. So this started February 28th, went from 2.4 million up to 180 million. So the assets went up 7,467%. The share count went from 125,000 to 16.9 million. So that means like the share count went up like much faster rate at 13,500. So just to do some back of the envelope type of calculation, this is like a roughly 45% tourist dilution. So in other words, OT should be trading for around like the $15 mark, instead of $10-ish. I mean, I don't know if that really makes people feel any better, because you would still be, in terms of just like the nominal share price, you'd still be sitting on a loss, but like the total return might not be as bad. But I'm hoping for the best for everyone in this particular fund. Maybe might need to pour one out for the homies, or maybe there'll be a reverse stock split or something. But let's move on to SPYT. So this one started March 7th. So roughly 6 months in. So 2.5 million up to 51.8 million assets. Went up to 1,990%, and then the share count went from 250,000 to 2.7 million. So share count went up at, again, a slightly faster rate, but it's not too bad for this particular one. So 2,060%. I think a nice rally will just like catch this up fairly quickly. So that one's not too bad. Triple QT. This one started a little bit more recently, so June 20th. So went from 4.9 million up to 11.8 million. So assets went up at 138%. And then the share count went from 250,000 to 650K. So share count went up 160%. So good grief, Charlie Brown. I mean, it's not the worst one, but it's only been 3 months, and it's looking a little wobbly. But again, I think for this particular one, again, you just need a good rally, and then hopefully things will kind of catch up to each other. So things, hopefully won't be too bad for this one. So it's a good thing to note that for tourist erosion, it's not across the board. but you can't assume nothing. Like so, for example, like I thought like Nvidia would be like pretty beat up from tourist erosion, but surprisingly, it's actually holding up fairly well. Crossing our fingers. But there's always a chance it could happen. If God forbid, like another war breaks out in another part of the world where the actual chips are being fabricated. Things will get ugly pretty hurry. Because then, like for example, if something happens to Nvidia and Nvidia, that will also like have a huge impact on YMAX and YMAG. Don't in general, I would say don't get cocky or complacent. People are making obscene profits and they're bragging about it, but maybe people have forgotten what it's like to struggle. And then sometimes like the markets just come out of nowhere and just humble people. So ask me how I know. But again, even if your funds are going through like a rough patch, it won't be bad forever. Like sometimes like strong bear move can flush out weak hands, and then things kind of like fall back into place. So things will get better over time. Whenever you have a doubt, just like zoom out to like a longer term time chart, like I showed recently. And you see like just markets just generally go up over time, and then also there's like some market manipulation with the government, like printing money, and that money has to go somewhere, right? So just to keep everything in perspective, just be aware of any like outlandish claims, both good or bad, that people are putting out there. They're just ETFs, and they can be very situationally useful. So like for example, right now, like the high yield ETFs, in theory, things should be going down to like clearance prices, and then you also have the benefit of like high volatility too. Uh, so so like anything like when you say high volatility, anything that like when you see like a VIX over like 20%, that could be times to maybe start sniffing around for bargains. Just remember, like I guess people forget, like from the past, like the bad things that happened. So some people think that these high yields will continue forever, and they kind of lever up at the wrong time. You want to think of like a profit mercenary. Like when you see like extraordinary like profits, just take them. Have like a cash balance just in case. So of course, at the end of the day, this is just my opinion. Just please stay on top of your investments and your hedges, because sometimes like erosion, no matter if it's like from tourists or from just like the like manager underperformance, you want to just pay attention. If you have to take a temporary loss, just get out, think it over. This way you have like cash on hand and to kind of redeploy into other things. So thank you for watching. Hope people can like and subscribe. Hope people make some good money out there. There's definitely plenty of opportunity right now. So thank you for watching, and I'll see you in the next video. Bye now.